Welcome guys, if you're new here, I do in-depth stock market analysis videos on penny stocks, SPAC mergers, dividend stocks for passive income, and in-depth reviews of individual stocks to buy now. However, none of this is investment advice. This is just an opinion channel about money. Now, on this one, I want to talk about THCB. They're a SPAC merger company that's looking to do a reverse merger with Microvast. Microvast is an EV battery company. So this is actually a series that I'm working on for SPAC companies. I'll link the full playlist up above here. There's probably about a dozen in that playlist by now, and there's more to come. So it's a good one to check out. There's lots more reviews just like this one in there. Now, actually, this one I'm doing by request. I had quite a few people ask for this one, so it seems as though there's quite a bit of interest in it. So I took a look at it, and what I've done here is I've come up with a few points supporting the bull case and some points supporting the bear case. I want to present both of these to you. I want to tell you a bit about both companies, the shell company here plus Microvast itself. And if you stick around to the end, I'll give you my opinion on which case wins and whether I think this one is a good investment or not. Let's get into it. Okay, first up, let's talk about the SPAC company, the shell, that's actually gone public and is looking to do this reverse merger. So there's actually two companies that were formed at the same time here, THCA and THCB. So they were both originally formed with the intent of going after weed companies, hence the THC in the name. And so this one has found a target in Microvast. What they did here is I think they were getting close to the deadline. These SPACs have anywhere from a year to 2 years typically to find a deal. If they can't find a deal by the deadline, they have to dissolve and give money back to shareholders. So these guys couldn't apparently find a weed company to take public, so they pivoted late in the game here, and they're looking to target Microvast instead. So right off the bat, I'll have to say, even before I get into the bull and bear case here, I'm not very excited to see this. I really like it when these SPAC companies come with targeted industry expertise, not just a boatload of money. I'd like to see folks in there that actually know about the industry that they're targeting and can do an in-depth analysis in the company they're going for. That doesn't seem to be the case here. These guys are just backing the truck up with a bunch of money, and they don't necessarily, at least to my mind, seem to know a lot about either cannabis or EVs. They're just chasing the hype and the speculation and the attention that's focused on these particular industry verticals. So immediately, that's at least not a positive sign to my mind. So let's take a quick look at the story behind Microvast. So like I said, they're an EV company specializing in batteries. Their particular battery technology is focused on commercial EVs. So their claim to fame is fast charging. So their batteries are really, really good at charging up quickly. So the trade-off typically with fast charging batteries is density. These batteries are bigger, they're heavier, and they're actually fireproof, which is another claim to fame that they have, or fire retardant, whatever you want to say. And all of that makes them a good fit for the commercial EV space because density, weight, all that kind of thing doesn't matter nearly as much in the commercial vehicle space. So the trade-off is kind of nice, right? They've got the fast charging, they've got the safety going for the batteries, and the downsides don't really matter when you put these in large buses and forklifts and trucks and things like that. So it's a good fit. Their technology makes sense. So they were actually formed back in 2006. It looks as though the story was that the three founders were working for a company at the time that was acquired by Dow Chemical. They were into water filtration technology. So I think what happened is when that company or their company got acquired by Dow, they would often founded their own company, and they sort of leveraged some of the technology that they had developed or learned about in the water filtration business and adapted that to battery technology. The core part of their tech seems to be this lining system within the battery that contributes to the flame retardant properties. And that was a key breakthrough at the time, and I think it still is. So they were able to take what they'd learned in water filtration and apply it to batteries, which is kind of cool. Since then, they sort of grew through financing rounds with private investors. They tried to do an IPO in 2016, but they withdrew it. Not entirely clear on the reasons, although there are some indications, and I'll get into that in the bull and the bear case. And now, here we are at present day, they're looking to go public through this SPAC reverse merger.
What's the upside potential?
Okay, so point number one in the bull case is that this is a real company and they have real products. Their batteries are out there in thousands of commercial vehicles all around the world, many, many countries. They've been around for a long time. They have a lot of success stories. There's a charging station in Shanghai that they've been operating their bus fleet from, both their own fleet and with partners that they've used to develop the technology. So it's absolutely a real thing. There's lots of buses being driven around with these batteries in here. They actually participated in the Olympic Games and proved some of their technology there under very, very cold conditions, which is a pretty key differentiator here. It's really tough to operate batteries under those conditions, and they seem to have done a good job of it. So, there are rumors floating around about these guys that they're a scam, they're not a real company and all this kind of thing. I really don't see that that's true at all. They absolutely have solid technology to all appearances, and they're actually out there with real products and real manufacturing capabilities. Point number two here is that they appear to have significant validation in the U.S. from the Department of Energy, U.S. CAR, and USABC. So these are industry consortiums or organizations that are trying to foster development of EV technology, and they've actually made investments of a sort, in terms of these contracts that they've established with Microvast, and so there's a real vote of confidence there in the technology, right? Like these groups don't necessarily throw money at just everybody. There has to actually be something in the technology in order for them to put the money in to help foster it and to help grow it. So all of these deals are significant, and they're a real vote of confidence in the technology that the company has and their ability to execute on the technical side of things. Point number three is patents. Patents are really tough to judge, from the outside looking in, unless you're a patent lawyer or you're deep into the technology, it's hard to assess. But what you can look at is you can look at the number of patents that are granted versus just pending applications and this kind of thing. These guys do appear to have a lot of patents going back a long ways, not just a bunch of pending applications floating around out there. And at least in a cursory read of these patents, they seem to be deep, in terms of the technology that they address. It's not just novel improvements on a small process. These seem to be actually fundamental to the batteries that they're building, at least from what I can tell from the outside looking in. So that's a good sign as well, just the sheer number of patented technologies that they have. Let's talk about risk. Okay, so in the bear case, first up is that they have limited operations in the U.S. And so, I think this is a little bit where these rumors of a scam company have come from. Really, their U.S. operations are extremely limited. They are technically founded in the U.S. and they're headquartered in the U.S. But to all appearances, their headquarters in the U.S. is just rented office space. It's a suite somewhere in Stafford, Texas. There's apparently a few people there. If you look at LinkedIn, there appear to be a handful of folks in that office, office managers and marketing execs and that kind of thing. So it seems as though they only have a little bit of a foothold in the US in terms of public relations and, higher level marketing capability and that kind of thing. All of their significant business and technical operations are in China, which is fine, but I think that the key takeaway here is that they are not really an American company in terms of their ability to operate in and extend into the U.S. market. I think they're at the same disadvantage of any foreign company trying to really establish themselves in the U.S. market. They don't have that capability, and so don't think that they do just because they're headquartered in the U.S. They're a Chinese company that would have the same difficulty as any other company breaking into the U.S. market. The second point here is a little bit complicated, so bear with me. Basically, any private company, it's really hard to get into their financials and understand the operations of the business because they are private. They don't have that disclosure requirement. However, one of their investors, Ashmore, is actually a public company, or they had a publicly traded investment fund that was holding the private shares of Microvast. And so if you dig into some of the disclosures that they've had there, we can learn a little bit about the financials of the company just as they were reported in the financial disclosures from Ashmore. So there was a lot of information as I combed through the public disclosures that Ashmore had up there, and I tried to assemble bits and pieces in here, snippets, to try to make a point. The disclosures that they had filed in 2019 and 2020 were probably the most interesting. It sort of paints a picture of a struggling business in those years. One of the most telling things is right here. It seems as though what happened in 2019, an independent valuation of Microvast was done, and they basically wrote the equity valuation down to zero. The company had a lot of debt, minimal revenue, and at that point they said this thing is completely worthless. And that's quite a change from back around 2016, 2017, when this thing was valued at $2 billion. In terms of these estimates anyway, they were called a unicorn at that point. So somehow between 2016 and 2019, they went from being worth $2 billion to zero in the opinion of the auditor here for Ashmore. So that's really alarming. It appears as though, that has now put them in a bad position. As they say here in 2020, they're now at risk of having better capitalized competitors who can actually grow more quickly and leap out ahead of them. And I'll touch on that point a little bit further down here. So, and it seems to be, if you look over here on the 2019 side of things, it seems to be that the problem came from the reduction in subsidies in the Chinese market. Basically the strategy in a lot of these countries, China included, is to gradually withdraw the subsidies that were in place in the early days to foster innovation and growth in these companies. And now that that's done, it's resulted in a severe drop in revenues, apparently, that Microvast has experienced here. And as they say here, in addition, there's currently an oversupply of EV batteries in the Chinese market. So that was hurting these guys as well. So, we can't tell exactly what caused that devaluation, but it seems as though this is the most likely case, the withdrawal of subsidy and then the crowding within that market. Okay, so point number 3 is kind of a follow-on to that. So one of the things that Ashmore had stated in there was that, the strategy in terms of Microvast to get out of this mess that they were in was to pivot to passenger vehicles in the EV space. I think the issue with that is that their battery density, their current core technology, doesn't really support a pivot to passenger vehicles because, like I was saying, their batteries are well suited to the commercial EV space, but they're the complete opposite of what you would want in passenger EVs. So I've been looking a little bit at one of their competitors here, which is Romeo. They also make batteries. And in Romeo's investor presentation, Microvast actually makes a little bit of a guest appearance here in this chart, and they're calling attention to this exact problem. They're looking at the current leaders in terms of gravimetric density, or I guess the lack of gravimetric density, in terms of making these batteries suitable for the passenger EV space. And as they're saying here, Microvast is not exactly the leader. They're the complete opposite of the leader, according to this study that was conducted, saying that, in terms of the density space, they're the biggest, the bulkiest, and probably the less suited to these EVs. So I think, if this is true, then the problem that Microvast is going to face in terms of making this pivot into the EV space is that they have to adapt batteries that are completely unsuited to that application and try to make it work. How do they do that? Is that going to take a ton of R&D cash, time, money, delays? Who knows? It looks to me like a difficult adjustment for them to make. The fourth thing I'd like to talk about here is what I think is a pervasive problem across the EV manufacturer space is this withdrawal of subsidy problem. So I think a lot of companies are experiencing this issue where the easy money is being taken away. And it's like that old quote, right? Where when the tide goes out, we get to see who's not wearing pants. And I think this is what's happening to some of these companies, right? Where the easy money is gone and then the lack of a viable business model is gone. Because when that free money is flowing in to your customers and to you, you don't have the incentive that you need to generate a lean, efficient organization. And then when that money is withdrawn, suddenly the lack of a viable business model is exposed and you go into debt, the company's in trouble. And I suspect that's what's happening to these guys. Okay, so what's the summary here? I think these guys have really good technology. I think it makes a ton of sense. I think it's good tech. I think it's well supported by the patents. I think there's some really smart engineers on this team. They're a real company with real tech. The business side, though, there are a lot of red flags. There's a lot of indications that their ability to operate a viable commercial business is very, very questionable. I think that the good news is all on the technology side. It's all of the support on the R&D and the technology development, and the battery itself is great, and et cetera, et cetera, et cetera. And the early stage demos and trials and this thing at the Olympics, that was all good. So I think they have a real product here that is pretty cool, but I think they have not demonstrated an ability to operate a real business and go out and sell this thing and make money. And so given that, I think that this SPAC deal is a lifeline as opposed to an investment in future growth, right? I think on Microvast's point of view, this might be an attempt to get some cash to stay alive and to keep going. I think it's seen as a potential exit in terms of their private investors. And on the SPAC side, I think it might be an attempt to capitalize on the current EV hype. So both of those things coming together are great for these guys, but it's not great for you and I, the people that would actually go out and buy these shares. And so for these reasons, to my mind, the bear case wins by a mile on this one. So that's the story, guys. Hope it helps. Please throw the video a thumbs up if it did. Consider subscribing, ring the bell, and I'll see you on the next one.